Hello and welcome. Today we're going to have a look at the German stock index, both a review of my previous forecast, and then we'll have a look at what's going to happen next. As you can see, the DAX has been in an increase basically all of 2016 and into 17. So the forecast was a price increase. So, I mean, we expected a price increase, and basically already since this point here, we've been saying the DAX should increase. Probably the most likely targets were two. It should either be the lower green line or the top green line. Those two were the targets. And as you can see, we reached those targets and even surpassed it. So that is no problem. I mean, we bought the DAX, we still have it, and that's fine. But I also open up for the possibility, because those two trend lines you can see, one is here, misdrawed it a little bit, and the other one is here. The idea is that those two trend lines should more or less contain the price movement. And we expected that we could even see a test of the top trend line there. And we've done that. So actually, if the price increases stop right there, that would have been fine. We saw a little break above the top trend line. That is called a throw over, and that is very, very normal. That's something we expect. So basically, if it had stopped right at this point here, then it would have been perfect. But actually, we're seeing this. It's going a little bit further. So that puts us into, or puts me onto the spot a little bit, because everything changes a little bit now. Because as you can see, the current price is above the previous peak. And if you're into Elliott waves, that is significant, because basically that means that that whole move down that you saw here is just a correction, and that we are in an impulsive wave now. So there is some doubt as to what's going to happen now. But let me go through this with some tools. The first tool, the tool I'm going to show you, is what you can see down here. That is called, well, a deviation from trend. So I'm taking the red moving average. So the gray moving average is a short moving average. The red one that I'm pointing to here is a long moving average. So that could be anything you like, 200 days or whatever. And this calculation I'm showing you down here is just how far are we from the moving average. And the red line down there is the how far we're away. You can see there's a thick blue line in the middle, and that blue line, when it touches the blue line, for example here, this is where it's touching the blue line, that's where prices reach the red line. So that means you're right in the middle. So what can we learn from that? Well, we can learn that the current level here is about as far away from the moving average than that we normally see. Over here you can see it was a little bit further away. Over here you can see it was also at the same line. So it could be thought that we were at the end of of an uptrend. So the question is just, if that's true, well, we don't know, but we also see that the RSI down there is having a very high peak, and we're seeing a divergence, which is that the peaks are falling, whereas up here the peaks are increasing. So it's divergence, meaning that we are looking for some kind of price decline soon. So the question is, we can have two types of decline. If we believe that prices are too far away from the moving average, and we're going to see a decline because of the divergence. The decline could look two ways. It could be like a big one, like we saw over here, really big. From this one, it was far away from the moving average, and the RSI was above 80. then we saw a big decline. But it could also be a small one, because we've seen several types where it hit that top trend line here and the top trend line here. And in all of these cases, it was just a minor pullback. And over here, it was also a minor pullback. So basically, we cannot tell how big the pullback is going to be. So if we should condense it, basically, I'm saying my forecast was roughly 75% correct. I mean, the main thing is the uptrend has been there just as expected. Why is it not 100% correct? Because it went above the target. It went above those two green lines, and now it's even above the top trend line, the two black trend lines there. So it's going further than we thought, or than I thought. So basically that just means that if we're going to see a pullback, where right now, what it means is there's 2 points. Point number one, we keep the stocks we have, because clearly it's an uptrend, it's an even bigger uptrend than we thought, so of course we keep the DAX. Point number two is we expect a decline. How big the decline is going to be, I have some ideas. And of course it can be small, it can be big, but I don't like the fact that the decline can be big. So I want to sell the stocks if we get below the moving average. And so basically all I'm looking at now is I keep the DAX until I get a break below the gray line, the short moving average. And then you can liquidate some of your stocks. And if we should see a break below the red line, I expect that. But if we should see that, we can sell the rest of the stocks. So that's my perspective. But this is the weekly chart. Why don't we go to one time frame higher? And this is the monthly. So what we're seeing here, and it's a little bit new, but what we're seeing here is actually we got the 5 waves of an Elliott wave here. Waves 1, waves 2, an extended wave 3, and the extended wave 3 is consisting of 5 waves. Then we got an ABC move down for wave 4, and that means we're in wave 5 now. And a wave 5, of course, that can go on for a long time still. I mean, but normally, I mean, one rough guideline, and that's only a guideline, is that wave 1 can often be the same length as wave 5. And just by measuring by the eyes, you can see more or less there's still a little bit of room to the upside. If you're even a little bit premature in your counting, you can say there's a very small 1, 2 there. And right now we are at wave 3 inside wave 5. So basically we could have a small decline and one more increase getting above today's level. And that would then conclude number 5. So there is some perspective to this. And from the long-term perspective, I am a little bit worried about the RSI. The RSI right now is above 80. And it was also above 80 here. And it was also above 80 here. And it was also above 80 here. So we've got something cooking here, that we are probably in wave 5 and we are at the end of wave 5, maybe a little bit down, a little bit up again, and then we conclude wave 5 this year perhaps. So if we see any kind of decline, I would be happy to liquidate all kinds of stocks there, because I don't like the downside risk. From each of these peaks you see in the RSI, we've seen a significant decline. And let's just say the decline is very small. Well, one of the smallest declines we've seen from an RSI over here is the decline we saw from 1 down to 2. And that would be the absolute minimum kind of decline we're looking at. But coming, if it's true that this is wave 5, it's going to be rather bigger. It's going to be a bigger ABC down. So all in all, the conclusion is, point 1, we keep the stocks. We're in wave 5, it can still go further up. Point number 2, if we see a price decline below, and I'll just go back to the original chart. If we see a price decline below first the short moving average, the gray line, and if we see a break below the red line, I will want to liquidate stocks, like some percentage first and then all of them at the second one. So that's the perspective for now. Let's see if it works out. My previous forecast was not totally correct. It was like 75%. We got the uptrend, but the uptrend took the level higher than I thought. So let's see if we get a top this year. That's going to be quite meaningful if we do get that. Otherwise, if I'm wrong, it will just continue up all through 17 and into 18 and just continue up and up and up. So that's going to be quite interesting to follow. I'll see you in the next episode.